Okay, we're rolling. George Beall from Lombard Finance. How are you?
Hey, doing well. Thanks for having me.
Yeah, thank you for joining. I am a huge fan of Bitcoin Bull, of course, and want to get more Bitcoin projects on the pod. And so, really grateful that you can be on to talk about what neat things you guys are doing at Lombard Finance. Before we get there, though, we'd love to hear about your background. You have an interesting background that I think a lot of crypto kind of growth people share. And so I think they'd appreciate to hear a little bit how you got into crypto and more importantly, like why you stay.
Yeah, sounds good. So, yeah, first got into crypto in 2013 or so when my friends came to school and told me about Bitcoin. Didn't really understand exactly what it was at the time, but was very interested in tech. And so started to poke around and just learn a little bit. Seemed a little bit more of a novelty at the time. I often say if I went back in time and told myself there's an ETF and it hit 100K, I probably wouldn't believe myself. Um, but was doing a little bit of, mining on a small processor, did some trading on Mt. Gox, so started to like poke around. From there, when I went to college, was still crypto curious, had a little bit of crypto, was doing some trading. And then eventually I co-founded a project called Everpedia, which is now rebranded as IQ Wiki. But it was sort of a Wikipedia competitor evolved into more of like a decentralized Wikipedia. And some of the co-founders are like Sam Kazemian and Travis Moore, who are the founders of Frax now. And so all of the sort of co-founders at the time were very into crypto. We were talking about it a lot. ETH had just done their ICO, and we were sort of talking about what the impact of smart contracts would be for the next evolution of the internet, and just got really excited about the future there. And I think that's when I really got sold on sort of the future vision of, this isn't just sort of like a tech novelty, but this is actually the next iteration of the tech industry. That's probably about, fast forward, ended up going back to school, wanted to finish my degree. And then when I graduated, was looking to go into crypto full time. At this point, this is now 2018. Market had just crashed. Not a lot of people were hiring. And so figured, okay, I've done sort of the startup side of things. Let's try to learn how do actual like big companies run? What does best in class operations look like? I had a lot of friends that were getting recruited to Walmart e-commerce at the time. They were starting to make their big push into e-commerce. And so joined as a business analyst there, oversaw a section of the total Walmart.com P&L. And so was focused on TVs at the time. When I joined, my P&L was about $10 million over 2 years, and growing that to about $250 million, improved profitability, got to touch really sort of like every layer of the Walmart business. And, I think as someone who grew up in Los Angeles, Walmart's present, but maybe not the most desirable shopping location. I think you can learn a lot from Walmart in that 95% of all Walmarts are within, I think it's 10, maybe it's 15 miles. Or 95% of all Americans live within 10 to 15 miles of a Walmart, which is just insane distribution. And then in most other parts of the country besides the coast, Walmart is actually a very core pillar of their economies. So, with that, I think learned a lot about, how you run a good business, how you try to optimize your P&L, how you best look after your customers. After about 2 years there or so, I was starting to get a little bored of the corporate life. Crypto was now starting to pick back up. At this point, it's now about 2020. And so there's also a little bit more jobs available. Figured it was a good time to get back into the industry. And so ended up joining Commonwealth to lead go-to-market there. Didn't, exactly have as much like business context in terms of like quote unquote crypto BD. Not sure crypto BD was really sort of like the meme it was back then as it is now, but just, start to talk to a lot of people. Commonwealth was a very early multi-chain project. So we were on actually Polkadot first, then later Ethereum, and then eventually Cosmos and a couple other chains as well. And so got to talk to a really wide gambit of builders. And we helped UIDX with their governance token launch. And we worked with everyone from Axie to Terra to 1inch. And so got a really good sort of high level view of what was going on within the industry, which was great experience. And then also really got to see the inner workings of how do DAOs, foundations, community governance, et cetera, work. After a couple of years there, ended up leaving, joined Gauntlet, and then was doing a BD at Gauntlet for a short period, and then recently joined Lombard last November to
That's
lead
cool.
strategy. It's been a weaving through a variety of different types of projects, everyone from more platforms to DeFi protocols to Gauntlet and sort of like more of a quant lens and risk management. Additionally, throughout that time, I've been an active angel investor. I find it's a really good way to just support other builders within the space. continue to get sort of like a view into what other companies are doing. Yeah. So, been fortunate to have a lot of great experience and, get to work with a lot of amazing people within the industry. In terms of sort of what keeps me here, I think, the more and more I have sort of gone down the rabbit hole, learned about the space, and also, I've been fortunate enough to see a good amount of sort of the TradFi side of things. I went to school at Wharton, so a lot of my college counterparts are at, the investment banks, that I think a lot of us don't like these days. And it's just so obvious that TradFi is a very inefficient industry, one that's really ripe for extraction by people who understand how those systems work. There's so many layers of middlemen who will take their fees. Those fees start to add up. Add on top of that, I've always really believed in the banking the unbanked narrative of crypto. I think even with sort of just wallets and yield-bearing stablecoins now, there starts to be an incredibly powerful onboarding mechanism and new financial product that many people around the world have never been able to experience. I think within that, as a US builder living in a major city, oftentimes it's easy for me to forget who's really the end beneficiary of crypto. It's honestly not Americans. It's everyone else in the world who doesn't have access to, even a basic financial system. Even within the US, many people are maybe underbanked, but the vast majority of the world benefits so much more from everything that crypto is building. And I think, really just trying to work towards that better future. And every so often, I sort of try to take a step back and look at the industry and make sure we're still working towards that North Star. I try to forget about the meme coins and everything else that catches attention on Twitter. Or wallet numbers continue to increase, or transaction volumes continue to increase. We start to see a lot more adoption of these core primitives like stable coins, et cetera. And that keeps me excited. So, yeah.
No, that's cool. I think a stat that really drives home the point about, who crypto really benefits is Nick Carter's VC fund. I think they co-sponsored a paper on stablecoin adoption, and they go through all the countries that have a reasonable or meaningful stablecoin adoption. And one of the countries is Nigeria. And apparently it's like one of the fastest growing places where stablecoin is used, which is really fascinating. You kind of anecdotally kind of know that, Africa is a place where it's, mobile is like the number one way of payment. And apparently it's like mobile payments with stablecoin is just huge in Nigeria. And so that's pretty interesting. For those interested, check out Nick Carter's. I forget the name of his VC fund, but they have a really interesting paper on stablecoin adoption that I think everyone should check out. But that's really cool. I remember Commonwealth. This was during when kind of DAOs were a big deal back in. I mean, they still are, but everyone thought everything would be a DAO. And I remember signing up for Commonwealth and like participating in a couple of governance votes. I forget with which projects, but that's really cool.
Awesome
that you were there early. When you joined Walmart, what was, having been a founder at Everpedia, do they recognize that as what was their view on that? Like hiring kind of an ex-co-founder of something that was like a competitor to Wikipedia, which is like a huge deal. What was their view on that?
It was mixed. I'll give, Walmart some credit in that, I do think the e-commerce arm of the company, at least for a period of time, was a lot more embracing of young talent, the tech industry culture, et cetera, than stores was. But also at the end of the day, stores makes up, I think, 90% of Walmart's revenue. So they often would call the shots. I think with that, the e-commerce side, they really tried to lean more towards these people that had tech background, were a bit more entrepreneurial. So there was actually kind of a cool culture there. Beyond that, I'll say, I sort of developed a reputation with my manager and sort of directors and VPs and stuff as like someone who is a little bit more able to get things done. And so they would often be like, hey, like, we don't think this department's giving us the right love. Like, just go talk to them, figure out what's going on and like fix it. And so that was a fun bit where I was able to do a little bit more, ad hoc, strategic work. But I think also those skill sets have done well for me as I've moved back into startups, where navigating sort of the weeds of an industry and understanding, what is the thing that you need to do to get your result.
Yeah.
A valuable skill.
No, that's cool. I started my career at Amazon a long time ago, and there was a point where there was a Walmart e-commerce was just starting out, and they were literally hiring anyone with like Amazon pedigree. And at the same time, eBay was starting their kind of entry into kind of fulfillment. And so they're hiring everyone at Amazon. And so it's just like, it's kind of funny how things kind of ebb and flow. And then, but yeah, good times. Good times.
Yeah.
Well,
I'll say just on the Amazon note, definitely a lot of my business learnings have been sort of watching Walmart make failures and Amazon execute properly. And so, I do have to give so much credit to Amazon. They're just an absolute beast of an entity, really just demonstrate operational excellence at its best. Definitely something I try and channel whenever I, approach projects.
Yeah, that's really cool. I learned a ton. It does fail quite a bit though. There's some very public kind of spectacular failures, but a lot of the failures are internal because they really encourage a lot of experimentation. But they're like structured experimentation that doesn't necessarily go public until much, much later.
Yeah.
And there's so many internal failures, but it's like by design.
But that's good. Yeah.
Yeah,
I mean, I
totally.
think Walmart could have failed a lot more earlier on. And I think they didn't realize they needed to be doing more until Amazon pretty much
Yeah.
had a rig one.
But it's such a difficult culture to foster and encourage, like a culture of like experimentation. Prior to Amazon, I was at Toyota, and Toyota is the same thing. It's like
Yeah.
the Toyota production system is all about you experiment, you improve, you try, and then it's this plan, do, check, act loop. PDCA is what they called it, based on the lean manufacturing. And then Amazon hired many people don't know this, but in the initial days of Amazon kind of like operations, like I'd say probably like 60% of the people that were at Amazon were from Toyota.
Wow. That makes a lot of
And
sense.
so, and one of Bezos's favorite books is The Toyota Way. And so it's like you see it in
Yeah.
how they run their operations. Well, let's kind of pivot to Lombard Finance, and I kind of want to start with the homepage. I think the homepage gives us a sense on like who Lombard is talking to and like its target audience, and I would love your point of view on that. But the homepage headline says "Infinite Possibilities with Liquid Bitcoin." And then the subhead is LBTC is liquid, yield bearing, natively cross chain, and one-to-one backed by Bitcoin. Love it. But who are you talking to specifically? What is it you want that target audience to do the second they read the headline and subheadline?
Yeah. So I think there's really two major use cases that are largely the same for both retail and institutional, but of course, slightly different nuances to both of those pitches. But I think it's number one, Bitcoin is now one of the largest assets in the world, not even just crypto assets. There's very little you can do with Bitcoin, especially when you compare to other crypto assets like ETH, where, ETH just has limitless DeFi integrations. It's on many chains. There's a lot of stuff you can do with it. Not a lot you can do with Bitcoin right now. So number one is for anybody that's looking to start to generate some amount of yield, put their Bitcoin to work. They're this hodler mentality, but they want to start to actually see some benefits and not have it be as passive of capital. So for those types of people, they can bring their Bitcoin to Lombard, mint LBTC on any of their destination chains. So, it doesn't matter if you're an Arbitrum user, a base user, movement, etc. Pick your destination chain, and we're continuing to add new chains each week. And then you can start to integrate your Bitcoin within those ecosystems. Sort of number two then becomes additionally people who they're up a lot on their Bitcoin. They want to get some amount of utility or liquidity, but they don't necessarily want to sell. I mean, so classic like trying to avoid cap gains, at least for some period of time. And so for those people, again, similarly, bring your Bitcoin. We're integrated with Aave, Morpho, Gearbox, Euler, a couple other lending markets coming soon. And so you can start to then deposit your LBTC into these lending protocols, get some amount of liquidity. Also have some other options that we're cooking up with a variety of other DeFi protocols. Yeah, so that's sort of two prongs. It's really this combination of both liquidity and yield. Sort of then the next bit of the yield bearing. So if you think of like WBTC similar to WETH, then LBTC is stETH. And so additionally, as different crypto protocols think about security, we're increasingly moving towards a proof of stake world. As EigenLayer has sort of introduced with restaking, there starts to be this question of what crypto asset should you have underlying your protocol security? Go back to 2021, 22, it was always, okay, launch your own native token, use that as security. But as we sort of saw within the Cosmos world, doesn't really work super well. You end up having to just have an insane APY in order to justify people to have this in there. Native tokens are much more volatile. That sort of gets to it, is like, if you want to have a lot of economic security, you need to have ideally a less volatile token and also one with a large market cap. And so if you're launching a new token, you have both a small market cap and a lot of volatility. So it's not a great crypto economic asset. You have to pay a lot of APY. That APY is just token emissions, which then leads to your token price going down. So not a great model. EigenLayer then came along and was like, okay, we can start to allow people to use ETH to secure their different applications. Primarily more focused on dApps built on top of Ethereum. So you see different like AI projects, oracles, etc. Then sort of along came Babylon. Babylon is currently focused a little bit more on the chain side. And so talking with a lot of the Cosmos chains, a number of them have already committed to using Babylon. And so then those chains can start to use Bitcoin to secure the chain. And sort of tying this all back together, Bitcoin at this point has some of the lowest volatility of crypto assets outside of stablecoins. It has the most robust market cap, especially during the recent volatility as markets have gone down a little bit. Bitcoin has been the most resilient in terms of holding its price. There's a number of reasons you could chalk that up to. Not necessarily here to make too many speculations, but the fact that there's ETFs, governments are looking at buying, et cetera, probably just leads to a little bit more price stability. And so then with that, all of a sudden you can start to have, whether it's chains, dApps, et cetera, that are looking to have security via some sort of proof of stake model, they likely would have to pay a lower APY in order to get the same amount of economic security if they use Bitcoin versus even ETH or their native token or something else. And I think that's a really powerful primitive that more and more both chains and applications will start to adopt. So from there, if you are an LBTC holder, you will natively accrue this yield through Babylon in a similar fashion to just holding ETH.
Got it. Maybe we can go through kind of the customer journey of, I guess, if you think of all your customer segments, there's retail folks with Bitcoin, and then there's probably institutions. I'm guessing miners would fall in there too, that maybe want to hedge their Bitcoin or be able to, pull some liquidity out using Lombard. What is the customer journey of someone using Lombard? Maybe we can just walk through that.
Yeah, so sort of two options to get LBTC currently. You can either swap for LBTC on Uniswap, Curve, or Aerodrome, or a number of other dexes.
So I have my BTC, and then I'm a native BTC holder.
I was starting with swap. Yeah.
Okay.
So
got it.
I guess we can go the minting route. So if you don't have BTC, you can swap for a USDC, ETH, anything. You can acquire LBTC. We have some of the deepest liquidity of any BTC on chain, and so you're going to pay very little slippage. Like I think even if you did a $15 million single swap, it would be like less than 50 bips. From there, if you have BTC, whether native or otherwise, you would go to Lombard Finance. You would connect your wallet, and then you would deposit your BTC into Lombard. Lombard would then go and stake that BTC with Babylon, and then you would choose whatever your destination chain is. So say you want it on Ethereum, but you would then, say I want it on Ethereum, here's my Ethereum address, and then they will, Lombard will send you LBTC minted on Ethereum. But, any of our destination chains you can choose for native minting.
Got it. Okay, so that's kind of two customer segments, the native BTC holder, and then there's someone that wants exposure to LBTC, but not with Bitcoin. They instead purchase it with whatever swap pair that's available. For that customer segment, why would they want LBTC? Like, what's in it for them?
I mean, I think you're definitely starting to see people realize that Bitcoin is maybe one of the most resilient crypto assets. There's any types of archetypes, but whether it's someone who's been a little bit more quote unquote sidelined, all of a sudden they're starting to see like, okay, Bitcoin's potentially going to get government adoption in terms of strategic reserves. Like I think it's a good time to buy Bitcoin. So maybe they just want Bitcoin exposure. Or maybe there's some meme coin degen looking to start to rotate profits into Bitcoin. I think especially like traders like Kobe, big advocates of, take profits, into both like stable coins and majors. So whether you're holding stables, ETH, Solana, I don't know, Fortcoin, but you just want a slightly more resilient asset.
Mm-hmm.
I think that's for you. And then, on more of the Bitcoin side, it's, if you actually want your Bitcoin to be put to work, want to start to earn some yield with it.
Yeah. For the first archetype, if I buy LBTC with whatever, why wouldn't I just want to get Bitcoin? I guess I'm trying to answer that because I think that's probably a question that maybe kind of more Web 2 people are thinking is, okay, why don't I just buy Bitcoin versus, LBTC? Like, I guess what's in it for that archetype?
Yeah. So, right now we are in sort of the points phase of the project. So there isn't explicit real yield yet. But, if you fast forward, you can make a similar comparison, I think, between like stETH and ETH. Yeah, some people may want to just hold raw ETH. They just like the security of that, don't want to necessarily do anything else. But additionally, I think a lot of people would rather earn, 2 to 4%, depending on where staking yields at right now, in terms of ETH terms. And so it just starts to add a little bit more to your end results. I think additionally, like, say you're someone where you want some amount of Bitcoin exposure, but, maybe you want to buy some Bitcoin and then also still take a loan out against it. I don't know if you have a fancy DeFi strategy or you want to make a down payment on a house or whatever. At that point, any amount of yield that LBTC is accruing then starts to also offset any of the interest that you would be paying on that loan. And so it also
Gotcha.
starts to make some financial flows a little bit more feasible, assuming that you're comfortable, with the layers of risk. And there's not that much risk. We've tried to approach things very securely and safely, but there is some additional layer versus just holding raw Bitcoin.
Yeah. You mentioned two things there I want to explore a little bit. You mentioned the points program. And so in crypto, there are some kind of, I guess, campaigns where to participate in the campaign, you earn points, and then eventually those points translates to some kind of token airdrop later on. And so, I'm kind of backing up in case, the audience may not understand what a points program is. And apparently there's one at Lombard right now where they're able to, stake their Bitcoin, receive LBTC, and then they receive points for that action. Is that correct?
Yeah, that's correct.
Got it. And how is that going? Like, what metrics are you tracking to tell you if it's heading in the right direction?
Yeah, so I mean, it's been going really well. We're up to about just over 20,000 Bitcoin staked. Translates to about $1.9 billion in TBL. So
That's
yeah,
amazing.
that's been, it's been, I think we just cracked the 2 billion mark, and then it dipped back under with the Bitcoin volatility recently. But I think we hit 2 billion just before 6 months of being live. And so, yeah, it's been just immense growth in a really short period of time, which has been really cool to see. Beyond that, other stats that we care about, total number of minters as well as total number of holders. Because again, there will be some amount of people that swap for it versus directly mint. Both of those have been really strong. I'd have to double check our Dune dashboard to see the latest numbers, but I want to say minting numbers is somewhere around K plus or minus wallets. I think total holders is somewhere 80K. So we do actually have a lot of people that have been net swapping into Bitcoin. From there, other metrics we really care about are the total amount of LBTC actively deployed within DeFi. But we don't want this to just be some token wrapper. The point of all of this is so that way you can actually get your Bitcoin put to work, get it added into different protocols. And so we want a lot of it. I think our goal is usually to stay above 50%. I think we're somewhere in the range of like 55, 65 right now. So yeah, so all across the board doing really well on our metrics. It's been great to see.
No, that's great. Putting LBTC to work, maybe we can unpack what that means. I believe that involves a lot of business development, partnerships with other protocols in the space, which is kind of like the area that you're leading. Maybe tell us a little bit about that. I stake my Bitcoin and then I receive LBTC. I guess what are my options there? And tell us about the I guess the process by which you obtain these partners to work with Lombard.
Yeah. So yeah, we have sort of a couple camps of partners, combination of new chains to deploy on, as well as the individual DeFi protocols. On sort of the DeFi protocol side of things, we have, I believe the latest number is something like 50 plus.
It says
integrations.
57 DeFi integrations, which is amazing. That's like
Yeah.
57 different projects.
Yeah. So that's been a lot of fun. Definitely a lot of work, just getting all of the integrations done. From there, to give a sample of some of them. So first, you can start to do some amount of like DEX LPing. So if you had some amount of LBTC and say CPBTC or WBTC, you could start to pair them against each other either on Curve or Aerodrome or Uniswap. and you would earn some passive amount of LP fees from people doing those swaps. Benefit there of doing a same pairing is that you wouldn't actually have impermanent loss, which is often one of the larger drawbacks of doing LPing on Uniswap. And so you don't necessarily have impermanent loss. You end up getting potentially some decent fees. And so, that's one option for people looking to get some additional yield with their LBTC. From there, we have lending protocols. So again, Gearbox, Morpho, Aave, you can start to either supply LBTC and earn some amount of yield from other people borrowing it. Admittedly, that's maybe not like the major use case right now. You can also supply your LBTC and then borrow something against it. So, I think two user flows we see there are either supply LBTC and borrow stables, or supply LBTC and borrow like a WBTC or a CBBTC, swap that for LBTC and sort of loop it that way. And so that way you can get a little bit more like points and yield on your underlying Bitcoin. From there, we have integrations with Pendle. And so that's sort of like a yield marketplace. So you can start to pick different durations. So I think they have one now that's up in like June. So it's about 120 days or so. You would lock your LBTC, you receive PT and YT tokens back in return. You can start to make some yield. If you're not super in the weeds of DeFi, Pendle's going to be maybe a little bit harder to understand. But for people that are more familiar with DeFi, they usually like it. It's a good option for us. From there, we additionally have a lot of vault partnerships. And so we have our own DeFi vaults powered by Veda. Additionally, we've been working with Concrete on a vault for Berachain, as well as vaults for Sonic, Movement, and others. And so with those vaults will start to automatically allocate LBTC across a variety of different yield opportunities on chain. And so it takes a little bit more of the active management out of the question for users. And, they can pretty much look at a variety of different vaults, see how those vaults are rebalanced, choose their picture. I guess maybe like ETF isn't like a great analogy here, but like some sort of like index for like on-chain LBTC yield.
Gotcha.
Yeah. And then additionally, really excited to start to roll out LBTC as a collateral asset for perps exchanges as well. And so I think like as we look at centralized exchanges, Bitcoin is primarily the largest collateral asset that people will trade against or trade as collateral on CEXs. But when you look at DEX perps, it's by far USDC is the major collateral asset. Not much Bitcoin is used. And so, I think there's a major opportunity here as perps on chain start to get a little bit closer to the form factor that CEX perps have.
Yeah. Now, as head of strategy, I mean, you're in the weeds in terms of like what, loops and DeFi kind of strategies are available. In terms of education, how do you help kind of new people that, are still learning kind of like what WBTC is, CBBTC, like all of these acronyms?
Yeah. I try to be patient, try to talk to people, get out there. I think sometimes teams are a little in their insular bubbles. Space only gets bigger if you really help explain stuff to folks. Everyone's at a different point in the crypto journey. Always just try to be helpful. I think from there, like as I start to, break it down, one of the big questions with any form of on-chain Bitcoin, and I mean, to an extent that even applies to CEXs as well, is there aren't smart contracts on Bitcoin. So when you put Bitcoin into something, you have to understand like what that thing is, because it's very different from depositing it into a smart contract on Ethereum. For WBTC, there's a 2 of 3, more or less multi-sig. And so any mints, redemptions, deposits, etc., has to get authorized by that 2 of 3. For Lombard, we just scaled up to a 14, admittedly, and I should know this. I want to say it's an 8 of 14, but I'd have to double check that number. But with that, we have 14 of the leading institutions in the crypto industry. So everyone from top validators like P2P and Bigmint, top centralized exchanges like OKX, Wintermute on sort of the market making side, as well as Amber and a variety of others. And that total is going to scale up to 21. And then on sort of then the other side, you have Coinbase, which is more or less a 1 of 1. And so, if you trust Coinbase, you can probably trust CBBTC. And well, like maybe less secure, candidly, I think like people can probably trust that.
Yeah.
Like Coinbase isn't going to wrong anyone at this point. But, I think we wanted to really try to offer something that's, embraces that legitimacy that CBBTC brings to the table, but does so in a more decentralized manner. And so you're not just trusting one legitimate institution. In time, you'll be trusting the joint reputations of 21. And you're almost making a bet that like, would half of the most reputable institutions in crypto be willing to rug themselves and like rug the industry? And that answer is probably no. So I think in that sense, that's where we're able to offer a little bit better security to users. Additionally, from there, we are really strict about all proof of reserves and all underlying. So for some BTC, not going to name names, but some folks pretty much it's like, if you prove that you own BTC, they will issue you the derivative, and you maybe have to opt into some like 2 of 2 structure where both the holder of the Bitcoin and the project would need to sign to actually have the project take the Bitcoin back. But in that scenario, if the derivative goes to 0, and all of a sudden the project's like, we need to take the Bitcoin back so we can do redemptions. If I'm that holder, I'm probably not signing that transaction. So like, you don't actually have access to that Bitcoin. And so we spent a lot of time building out a robust permission system here, partnering with Cubist. And with that, there's a ton of restrictions. The Lombard Consortium can do very few things. And so it's actually very, very difficult for anyone to pull off any kind of attack, even similar to the Bybit hack that happened recently. Honestly, I was a little surprised they didn't have something similar to Cubist in place. So, I think that gets into it from there. Additionally, we're the only project that's had proof of reserves from day one. We want to make sure people feel very confident that, all of the assets are there. They can pull them whenever they want. We've always had one-to-one redemptions.
Got it. So you've described kind of the permissionless, non-custodial kind of securitization of people's Bitcoin. And then the proof of reserves, maybe you can define that a little bit for the audience. What does that mean?
Yeah. So, I think proof of reserves really popped up as a, buzzword for more or less after FTX, and triggered this issue within the industry of, wait a second, like, we don't actually know if some of these entities have the assets that they say they do. And so you started to see entities like Binance, OKX, most of the big centralized exchanges at this point all have some form of proof of reserves. They pretty much were like, okay, we're going to track all of our wallets that are, somewhat in this system, show all of those assets on a dashboard. You can continuously look at that to see how much money is actually in the system. And honestly, that was a really great reaction to everything that happened with FTX. From there, we have started to take a similar approach with Bitcoin, especially again, because of the complexity of Bitcoin not having smart contracts. It's just a lot harder to like get that level of transparency. And so we work closely with a number of different partners, including Chainlink and others, to very thoroughly track all of the underlying assets, keep that updated on an ongoing basis. And so we maintain a small buffer in terms of operating capital. And so there will always be an excess of 1-to-1 for Bitcoin underlying LBTC. And so at that point, people can always feel very comfortable that they can come at any point and swap one LBTC for one BTC.
And this is, in the kind of the TradFi world, this is kind of akin to, a bank being able to show proof that they have indeed the funds to be able to satisfy, all the redemptions that might come against it. And so that would be a proof of reserves for, within the crypto kind of context. When you evaluate chains in which to integrate and also applications that you want to support or partner with, what's some of the criteria that you look at? I imagine there's lots of projects that want to work with Lombard. Like, how do you think about like who to work with?
Yeah, great question. It's honestly one that we will have to revisit on an ongoing basis. I think from there, the biggest question is really trying to offer, a very large swath of the crypto industry, like the best experience possible. So if there's a chain that like the industry has adopted and is very excited about, and there's real usage there, we will go to that chain. From there, deploying on chains can be somewhat time consuming. And so there is a bit of this game of like, okay, how do we pick like what is the next chain to go to? It's a continuous optimization problem. I think there.
Sorry, really quick. Let's say you pick a chain to work with. Does the integration, is it done by Lombard or by the chain or both? I guess what does that look like?
Yeah, so it's largely by our team. We will definitely work closely with the chains to ensure it's a successful launch, but ultimately we will sort of figure out having some sort of bridging integration just so that way, like, we have native minting on a bunch of chains, so you don't necessarily have to bridge around, but we want to enable that it is there so that way no one's really trapped. bridging, we need oracles, usually try to have some amount of redundancy with oracles. And then we additionally need to start to think about all of the different applications it'll get integrated with. And so, because again, we don't necessarily want to just deploy on a chain where LBTC is sitting there, but it's not actually being used. And so there's this, oftentimes, like it's coordinating like potentially upwards of 10 different teams to make a chain launch happen, which can make things flow at times, but is often worth the work.
That becomes like at least I'm guessing internally becomes like a resource allocation problem of, which chains and application do we want to prioritize? And then there's probably a queue in your pipeline that you guys are addressing. And I'm guessing that this queue is like well overflowing with interest.
Yeah.
That's a good problem to have.
It's a great problem to have, much better than the alternative. But it definitely keeps our engineers busy.
Was there a point where it wasn't overflowing, and so you had to do a lot of outbound kind of prospecting until you had enough pipeline that, okay, things are now moving? Like, what was that like when you had to do a lot of that outbound prospecting?
Yeah, so admittedly, I joined in November. And so I think at that, LBTC went live in August. By November, I believe we were at about 500, 600 mil TBL. So a lot of the hardest problem had probably already been solved. I'll give a lot of credit to the rest of the team. But, I think we saw a little bit even in my earlier days at the company. And then I also have been a friend of Lombard's for a while, was actually an investor early on. And so was able to sort of see a lot of the work from the outside in the early days. I think some of the big questions were largely on, it's like, how much activity will you actually have? Like BTC DeFi has been a more recent meme. So some of the chains or protocols or stuff were a little more reticent to integrate a project that they weren't sure was going to actually have users. I think you then fast forward a little bit towards like September, October timeframe. There were a couple other BTC LSTs, wrapped versions of BTC, et cetera, that were popping up. Lombard was leading, but it wasn't necessarily a clear leader. And so then there was also a little bit of this question of some of your larger projects were almost in like a wait and see mode. And so, we just continued active conversations with them. And then, ultimately, Aave, I think, is probably the biggest example of this. We're the only BTC LST that they have listed, which, we're really appreciative for that big sign of confidence. Ultimately, as they sort of wrapped up their full due diligence process, they really liked seeing, our security structure, our deep liquidity, an overemphasis on security and transparency. And so some of that stuff you do just have to build up with time. And so it's, long conversations, continuing to do the work and, picking off opportunities as they pop up.
Yeah, I'm fascinated by two-sided markets. And in a lot of ways, Lombard kind of has its own two-sided market with, people that provide BTC and then they mint LBTC. And then what do they do with that LBTC, which comes, and the answer to which is then like the partnerships that you have with applications where they can put their LBTC to work. How do you think about that internally? Because now you're trying to court BTC holders, but you're also trying to court applications to support LBTC and put the LBTC to work. Like how do you approach that?
Yeah. So, I think one easy bit is that pretty much every DeFi protocol is thinking about how do I get more BTC liquidity these days? And especially since there is so much LBTC in circulation, and we do have a variety of these vault products, which make it very easy to start to get liquidity flowing into DeFi products. We are positioned well to be able to talk to all of these folks and help bootstrap Bitcoin liquidity. Like I think even we just recently went live on Sonic. We're already about 7% of Sonic's total TBL for the entire chain.
That's amazing.
Yeah.
And Sonic is a rebrand of Phantom. Is that correct?
Yes, that's correct.
Okay.
Yes.
With Andre and team.
Yeah. Amazing guys. So, that's been helpful. I think Movement did some amount of pre-deposit vaults and LBTC was the number one asset deposited. And so I think case points of that really just demonstrate there is so much Bitcoin out there. I forget what the exact stat is, but I think it's like if 5% of BTC came on chain, all of DeFi's TVL would double. If I got that slightly wrong, I guess double check the exact numbers, but in that direction. And so, I think if DeFi is going to start to have magnitudes, larger growth, it really needs to start to win over more of this Bitcoin liquidity. And that's really the problem that we're trying to help solve. So, and,
And
we're really on the front lines talking to all of the major Bitcoin holders, and we have really good relationships with those LPs. And so, it's easy for us to help connect the dots.
yeah, that was my next question. I think it's like approaching like close to 2 trillion in Bitcoin liquidity. Or market cap, which is a good kind of proxy for liquidity. Getting 5 to 10% of that to put that Bitcoin to work, I mean, that would definitely double the current kind of DeFi, the market cap of DeFi. How are you approaching that? Like identifying kind of Bitcoin holders and like what is your messaging to them? Many of whom there's probably, if we were to segment kind of all Bitcoin holders, there's probably some that are very kind of, I'm guessing, um, I will never touch my Bitcoin. I will always protect it with my life. And then there's probably some that are like, yeah, I'll play around with 5 to 10% of my Bitcoin.
Yeah.
And so they're more open to Lombard and other protocols like Lombard. I guess what does the segment of Bitcoin holders look like? I'm sure you've done the work, and like, what's your positioning to each one in messaging?
Yeah. So, I'd say like no two conversations are exactly the same. Um, there's definitely some level of preference in terms of security. Again, there's, your Bitcoiners who will never put it in anything, store their seed phrase scattered across the world in like various safety deposit boxes, whatever. Then you have some who, they're very comfortable with Anchorage and traditional custody providers, but even then they want like some structuring of the documents and the control of the accounts. You have others who are, very willing to yeet it into, whatever sort of on-chain Bitcoin, and sort of everyone in between. I'd say from there, so that's sort of like one lens of categorizing people based on their like preference of like underlying insecurity. I'd say like on that bit, we have been seeing more and more interest from folks to get more on chain. So the people who would never touch it are starting to be interested in custody. People who are only comfortable with custody are starting to be willing to consider some of these on-chain forms. And so that's been positive to see. I think, one of the big bits is a lot of these folks just never thought about smart contracts, never thought about DeFi, didn't really do much. And so it was always just like, I'm not going to look into it. And now that they're looking into it, like we spend a lot of time sitting down, walking people through the security assumptions, walking through how the tech like very literally works at a very low code level. And as they have that sort of hand holding, and they get comfortable with how everything works, some of them will put, their own security teams on Lombard to, analyze how stuff is working, at some point get comfortable. And so, I think bits like that help with onboarding more and more capital. Then on the other side of things, I think you also start to see sort of your demographic types. And so you have, your like ETFs and institutionals, you have corporates, you have random whales who just happen to buy some in like 2011 and never sold. You have, liquid funds and your VC funds who've been buying Bitcoin. It's sort of, again, miners, the big smattering of folks. I'd say in a similar fashion, a lot of people are starting to have more and more interest in BTC-Fi. I think one of the like trigger points was ordinals and this sort of BRC phase. For listeners who aren't familiar with this, I think it was about 2 years ago or so, people started to realize that you could create sort of quasi tokens and quasi NFTs on Bitcoin, and then you would have to pay some additional gas fees in order to process these things. Some of them went to insane valuations. And at some point, the security fees for Bitcoin were more than 50% from these like ordinals and BRC activity and not from the traditional security budget. And so I think a lot of miners especially woke up to this and were like, okay, we are staring kind of down the barrel of like more and more halvenings. Our yield of mining continuing to decrease. We need to find some sort of supplement for this revenue. And at that point, a lot of them have been leaning in more heavily with ordinals and BRCs. And then as they go through that route, they start to realize like, wait, this is really clunky. Like, this isn't going to be the future, and so there's some amount of talk about like OpCat and some Bitcoin opcodes that, may start to enable smart contracts. I think those are a little far out. There still just needs to be better consensus on what is the path forward. But in the meantime, you can start to move your Bitcoin onto Ethereum, onto Base and other chains. And so I think that's where people are like, okay, we have all this Bitcoin. Let's go get some yield somewhere else. That way it sort of right sizes our business model in some respects.
I'm glad you brought up that history because we saw the same thing recently with Runes protocol or Runes meta protocol, which was kind of like I think Casey, it created Runes as a response to the clunkiness of BRC20. And the whole positioning was that, Runes meta protocol will be like the home for Bitcoin meme coins. And I actually got quite involved in the Runes kind of community. I don't know if you see that right there. That's
Nice.
so that's Dog, which is the largest meme coin on Runes, which recently actually got bridged to Solana and other chains. So I think time will tell, but we'll see. But I think what we did see recently, probably a few months ago now, was that the mining fees came at one point was larger on runes than on ordinals and on Bitcoin mining. And I think that surprised a lot of folks. So I think that's positive. It
Yeah,
shows that there's kind of progress within the Bitcoin community. And I think a lot of like hardcore Bitcoiners saw that as, okay, this is interesting. And at least now they're open to some level of programmability.
100%.
Very cool. Well, what thinking of the Bitcoin kind of community, what is one thing you could say to them to consider maybe Lombard is the place that, I could put my Bitcoin to work? Like, what is the messaging that you would, if Bitcoiners were listening to this podcast, what's one thing you would say to them?
Yeah. So, I think Lombard is one of the Bitcoin DeFi projects that prioritizes security and transparency the most. I do think at really the core of Bitcoin ethos is, this reliance on, trustless systems. There is technically some amount of trust in Lombard, but we are probably one of the most trust minimized. Again, if you trust that, 10 plus of our 21 eventual validators of top institutions are not going to come together to steal this, which, many of these companies are worth many magnitudes more than Lombard is, or, the underlying for Lombard is, you can probably trust that it's secure. And, with that, again, we have the largest liquidity of any Bitcoin LST in terms of DEXs. We have the most lending protocol integrations. So you have the most opportunities to try to find something to do with your actual Bitcoin.
That makes sense. And to those that may not understand kind of like liquid staking, do you have like information on the website or on YouTube, or like how do you teach someone what liquid staking is? Because that's kind of in TradFi it would probably be called rehypothecation, but that's no one wants to hear that in
Yeah.
crypto. So I guess how would you describe liquid staking to a Bitcoiner who may not know what that means?
Yeah. So, I'll have to double check. We probably have some amount of information in our docs. I know we've spent a lot of times on
I've
our
looked.
docs.
There's quite a bit.
Yeah, so definitely, click around there. It'll be a much more eloquent answer than I'll give right now. But I think ultimately, speaking to the Bitcoiner type, Bitcoin is a proof of work chain. Ultimately, Ethereum and other chains migrated to a proof of stake model. You would need to have some significant amount of the underlying capital in order to start to take control of the chain and do any sort of malicious activity. From there, if you end up staking your tokens, those are locked in that staking contract. And so you can't do anything with those elsewhere. Liquid staking ends up giving you a derivative version of that underlying stake. And so you will accrue all of your yield to your specified wallet. But then you also have this derivative token, which is, at least in Lombard's case, worth 1-to-1 and has redemptions live. And you can start to use that derivative token elsewhere in DeFi and start to get both the staking yield as well as the DeFi yield. You can also stake directly with Babylon. In that case, you don't end up getting the derivative token, but you would still get the Babylon yield. And, I guess then from there, if we want to go one step even deeper. So with Babylon, they utilize this concept of restaking. So ultimately, if Babylon has 3 chains that are using Bitcoin for security, chain A, B, and C, ultimately, all of the Bitcoin that is in Babylon potentially could be used to secure all 3 chains, A, B, and C. So if Babylon had 1,000 Bitcoin, chains A, B, and C could each have 1,000 Bitcoin of security. If there is a slashing event on any one of those chains, then the total underlying would get slashed. Now, thankfully, Cosmos chains are actually pretty secure. Like, I think in the history of Cosmos, there's been 1 or 2 hands worth of slashing events across all of the chains over many number of years. Realistically, if you're running the right code and you're just a good validator, then you're not going to get slashed. It's mostly an operational question versus a risk question per se. And so you can start to then get 3 sources of yield. You do, in theory, have 3 sources of risk. But if you trust that this form of slashing risk isn't that high of risk, then you can be comfortable with the system.
Okay. Well, that sounds like a really great place to end. George Beall, thank you so much for taking the time to speak with us and telling us about Lombard. For those listening, Lombard.finance is the place to go. You can put your Bitcoin to use, to productive use for you to, stake your Bitcoin, receive LBTC, and as of right now, there's 57 different DeFi integrations you can put your LBTC to work for or work with. I don't even know how to say that. Anyway, you could put your LBTC to work. Well, George, thank you so much for taking the time to meet. Really fun. Thank you.
Yeah, thank you so much for having me. This has been awesome.